Good morning, everyone. My name is Jay. I'm from Bite Size Coin, and I'm going to go over 5 articles today that happened probably while you were sleeping. So hopefully this will get you a little up to date. Are these the most important stories? I'm not sure. But they are stories that I found interesting, and I'd like to share them with you. As always, I'm actually really interested in your opinion on these things. So if in the comment sections below, let me know what you think. Um, you know, we're all in this together. We kind of have to share information. Um, Maybe you know something I don't. Maybe I know something you don't, and hopefully we can get together and make some sense of what's going on in the crypto space. So without further ado, I'm going to go ahead and get into this. All right, article number 1. We have privacy coins surge 20% after Australia cautions crypto traders against tax evasion. Privacy coins often get a boost when tax agencies crack down on crypto. This is by the Decrypt staff here. Decrypt staff. So no credit to anyone in particular other than the staff team at decrypt.co. As always, I will be posting all the article links in the description below, so you can go and read for yourself. I think a lot of these, just like any other media company, these things sometimes are spot on, sometimes they're very objective, sometimes they're subjective, but it is what it is, and you can see it along with me here. So. Privacy coins Monero, Zcash, Horizon, and Dash soared by about 22% in the past 24 hours, restoring some of the losses suffered in the most recent crypto crash. The rise could be down to a tax warning by the Australian tax office. There may actually be more than just that, and we'll get into that later on in a different article. These coins can obscure the provenance of transactions to safeguard the identities of senders and receivers. Monero, one of the most popular privacy coins, is widely used on dark web markets where drugs, guns, and other contraband trades freely. Certainly not the only use for them. Some people just like privacy, but okay, fair enough. Some of it is probably used for that. Zcash, which observed gains of 22.89% in the past day, led the pack. It started to rise on Friday at about 9 a.m. UTC. Prices kept rising until about 11 p.m., at which point they fell briefly before rising again early this morning to highs of $186, according to data from the CoinMarketCap. As you can see here, lovely chart. Ooh, look at that. I like that. They got it on there so you can actually see, and not just a static picture, but a dynamic. Okay, so this is about half of Zcash's all-time high this year, which was $370, achieved on May 12th. The same day as Ethereum hit all-time high of about $4,362. Elon Musk, Chinese payment associations, and Chinese government crashed the crypto market after they criticized Bitcoin, which fell to lows of $30,000 last week. Well, there's a lot of Chinese people who own Bitcoin. I could see where that might affect things. Probably a little bit more than what Elon Musk said. I'm sure that did spook some people in the Western world, but I would imagine these things are probably much more responsible than the other. Again, we have the Ether one here to give credence. Monero followed the Zcash's success, reaching highs of $293.73 early this morning. Again, this is far less than the price before Musk crashed the market. Now, see, this I don't like. Musk did not crash the market, right? I'm sure it was a whole bunch of different things that did it. Not to mention what we just went over, but I won't beat a dead horse. Monero hit highs of $517 on May 7th, its highest price ever. Right now, Bitcoin is worth just $35,228 and Ethereum $2,424, a little over half of their former all-time highs. So why have privacy coins spike while the rest of the market remains so quiet? It could have something to do with the Australian Tax Office statement yesterday that urged the country's 600,000 crypto traders to pay capital gains taxes on their holdings and reminded them that the agency matches data from crypto companies. While it appears that cryptocurrency operates in an anonymous digital world, we closely track where it interacts with the real world through data from banks, financial institutions, and cryptocurrency online exchanges to follow the money back to the taxpayer, said ATO Assistant Commissioner Tim Lowe in a statement. I am assuming that the ATO is probably like the IRS in America. I am not Australian, so I'm not absolutely certain of that, but I'm pretty sure. Privacy Coin's ability to obscure transactions makes it difficult for tax offices like the ATO to pin tax fraud on people. So when tax agencies crack down on crypto, privacy coins can sometimes get a boost. They rose 30% last week when U.S. President Joe Biden announced tax plans for crypto. this is something that I will probably be making a video on in a little bit. In the U.S., the Internal Revenue Service has spent millions on trying to crack down on tax fraud from privacy coins. In September 2020, it contracted Chainalysis, I believe that's how you say that, a blockchain investigations firm that dominates the public sector, to work out how to trace privacy coins. Oh, yay. That's great. Okay, and that's the end of that article here, and you have your standard disclaimer there that the views and opinions expressed by the author are informational purposes only and do not constitute financial investment or other advice. While I see this disclaimer, I might as well go ahead and have I'm not a financial advisor. I am reading you news and giving my opinion, and that is all I am doing. So don't rush out and go buy these just because somebody says that. Do your own research. I believe it is part. I believe this Australian. What was it? What was the name of their tax? ATO, was it? I think it's ATO. There you go. Australian Tax Office, I imagine, is what the ATO is. So Australian's tax office there, I'm sure it contributed. I don't know that that's, the whole thing. And we'll get to that at the last article. So we'll just go ahead and move on to the second one. And I would credit whoever wrote it, but it is Decrypt staff, so I'm not really sure who that is. So one of the members of the staff, apparently. All right, so let's move on to the next one. This one is made by Matthew DeSaro, I believe is how you pronounce that. Shapeshift's NFT report shines light on the future of the industry. Oh, and it was updated by Anna Alexandra. Okay. Ooh, nice graphic there. Swiss-based crypto trading platform Shapeshift has released a non-fungible token report titled Enter the Metaverse, Challenges and Opportunities in NFTs, which stands for non-fungible tokens, as you can see right here. The report takes a deep dive into the future of NFTs as it pertains to possible applications, hurdles that can hold the industry up, and potential security issues. Additionally, the paper touches upon the complex copyright problems that may arise along with the NFT growth. The later issue is based on a copyright and intellectual property that is perhaps the most intriguing, due in large part to the gray areas involved. As things currently sit, most NFTs sold in part whoever buys them with non-commercial rights to a piece. Okay, that's important to know in case you don't know much about the NFT space. Almost all of it is non-commercial rights, right? You have the right to the item, but you don't have the right to use it commercially. You can't put it on a t-shirt. You can't, you might be able to sell it, that one particular piece, but you don't have the commercial rights to print a whole bunch of them off and then sell them. So that's important to note in the NFT space. This allows the buyer's rights to ownership of the NFT with the choice to sell it as desired. What it does not allow is the commercial use of said purchase. In a step to change the non-commercial restriction, it's important to offer the ability to make the tokenization of copyright itself an option. He's right. That is important. That's something that's going to be very important. Why? Well, I mean, there's really good, real good reasons for that. Essentially, if you're an artist and you're doing a commission piece, or you're creating a logo, or you're creating something and you don't really want the copyright to it, you're like a ghostwriter or things like that. There's a lot of people who make their money off of actually selling the copyright or the rights to something to use commercially. Otherwise, they wouldn't get the work, right? If you want a t-shirt design, you're not going to go to somebody if you can't have the copyright to the design at the end, right? That only makes sense. So it's an important thing to solve, and it's good that people are working on it. Let's continue. Fractional ownership of NFTs. Another interesting topic Shapeshift's report touches on is fractional ownership and collateralization of NFTs. The idea behind fractional ownership is that you go in on a purchase of an NFT to share the investment both intellectually and financially, like going halvesies on a six-pack. Or each person buys their own beer. I don't think you'd want to fractionalize beer. You probably wouldn't say, I want a quarter of a can of beer. But I'm sorry, I shouldn't jest so much. The report does point out that the fractional ownership isn't possible with the current EIP-721 standard. However, that all changes with the recently adopted standard called ERC-1633. The new standard's purpose is to enable the ability to distinguish when an ERC-20 token represents shared ownership of an ERC-721 NFT, and by extension, any potentially underlying asset therein. Wow. Okay. This will be made possible by a refungible token, or RFT. Now, that one is a new term to me, but I'm sure it's been out there for a while. It's just new to me. Contract and assumes ownership of the connected NFT. Co-investing in NFTs. While the standard is new and still has a ways to go to be optimized, the possibilities it can offer are vast. It would ostensibly allow for people to co-invest in NFTs like real estate, intellectual property, and any other token that would be too rich for the blood of most investors. Seems like it would be a pretty important step in that space. One example made by the report involves music. The ability to buy and share a future of a song and its potential revenue would give new meaning to being invested in your favorite artist. The ability to buy a stake in a song or a movie could shift a lot of power from the old school record companies to people who have more personal interest in NFT success. Okay. This might be an important part to pause right here. This is going to be a big hurdle. I think it's a necessary hurdle to jump over, but it's going to be hard. Record companies, I mean, they're notorious for crushing opposition. The movie industry, any of these big old school juggernauts in industries are going to fight this tooth and nail, and they have a lot of money and they have a lot of lawyers. Granted, there are a lot of really smart people in the crypto space working on these problems, and we're just going to have to wait and see how the courts kind of parse a lot of this stuff out. I think overall it will emerge, and the old school will go away, and the new school will take over. I don't know what the timeline looks like that, however, and I'm definitely going to have opposition to it because these billion-dollar record companies are not going to give that up very easily. I can remember back when Napster came along. Boy, they came down hard on that. In some ways, there's not a lot that they can do about it, but at the same time, they are going to fight it, which will cost money and resources to get over those hurdles. So just keep that in mind. Ignore the hype. I'm sorry, I'm going to continue on. Ignore the hype with respect to how many millions such and such NFTs cost and how much money certain artists are making. These market cycles will boom and inevitably bust over time. Much like any other asset class, a bear market for NFT prices, when it happens, will not mean that the concept is somehow invalidated. We're only getting started, the report concludes. Well, that seems like pretty good reporting to me. Stayed fairly neutral there, kind of give you the facts. I do like that. So let's see, this is beincrypto.com. Let's look a little bit about the writer, Matthew DeSaro. Matthew DeSaro is a journalist and media personality specializing in sports, gambling, and statistics. Before joining Bean Crypto, his work was featured on Fansided, Forbes, and Outkick. With a background in statistical analysis and a love of writing, he takes an outside-of-the-box approach to reporting the news. Well, I do like this article. I would suggest I will put the link in the bottom that you click on there and maybe check out some of his other work. All right, we're going to move on to the next one. CryptoGlobe.com. With this big old advertisement right here popping at the top. Let's get rid of that. Okay. Ether beats Bitcoin as a store of value, says Goldman Sachs Global Macro Research by Michael Lavier. I apologize if I got that name wrong. Anyone who listens to me knows that I'm not very good with names. A new research report out of Wall Street banking giant Goldman Sachs predicts Ethereum overtaking Bitcoin as a store of value asset. Santiago Real Santos, general partner of blockchain-focused investment firm Parafai Capital, published a series of tweets showing excerpts from a relevant sections of a 41-page report titled "Crypto: A New Asset Class" by Goldman's Global Macro Research Team. Say that 10 times fast. Which was published on May 21st. The author of the report had this to say about Ethereum. Given the importance of real uses in determining store of value, Ethereum has a high chance of overtaking Bitcoin as the dominant digital store of value. The Ethereum ecosystem supports smart contracts and provides developers a new way to create new applications on its platform. Most decentralized finance, or DeFi, applications are being built on the Ethereum network, and most non-fungible tokens, or NFTs, issues today are purchased using Ether. The greater number of transactions in Ether versus Bitcoin reflect this dominance. As cryptocurrency use in DeFi and NFTs become more widespread, Ethereum will build its own first mover advantage in applied crypto technologies. As for Bitcoin, they said, a major argument in favor of a Bitcoin as a store of value is its limited supply. But demand, not scarcity, drives the success of stores of value. No other store of value has fixed supply. Gold supply has grown nearly 2% for centuries, and it has remained an accepted store of value. Plenty of scarce elements like osmium are not stores of value. In fact, a fixed and limited supply risks driving up price volatility by incentivizing hoarding and forcing new buyers to outbid existing buyers or existing holders, potentially creating financial bubbles. More important than having a limited supply to preserve value is having a low risk of dramatic and unpredictable increases in new supply. And Ether, for which total supply is not capped, but annual supply growth is, meets this criterion. Disclaimer, the views and opinions... Okay, well, we know what disclaimers are. All right, so... Nothing on the author, huh? Let's go ahead and click this just so we can get an idea. Mike is a financial and cryptocurrency journalist for Crypto Globe, covering the industry since 2017. Mike is an alumnus of the University of North Carolina, Chapel Hill. All right, well, Michael, now we know who you are. Again, just like every article, it will be posted in the bottom so you can read it for yourself. Feel free to check it out and see if you like Michael. All right, we'll move. You know what? Really quick, before we move on to the next one here. I could see where he would be right in certain degrees. And I don't want to go into super a lot of detail because, if you're going to talk about an issue like this, it's probably something that is going to take a whole lot of time, like lots and lots of videos to determine rather than just one article and one quick 10-minute blurb on it. So I'm going to let you make up your own decisions on whether you think that this Goldman Sachs fellow is on the level or not. I can kind of see both perspectives. It is important that Ethereum does have the first mover advantage, but that doesn't always mean that that's going to be the successful one. I mean, Bitcoin was the first mover advantage before Ethereum, right? Now, technically, they're different, and there's a lot more applications, a lot more things you can do with Ethereum than you can with Bitcoin. As a store of value, it's hard to say. I do know that total supply does affect price. Now, maybe that means that it's not going to be your store of value, but I think it is definitely one of the top stores of value, at least right now. Who knows? This industry is so new. Nobody really knows what the future is going to hold. I mean, there were plenty of first mover advantages in the World Wide Web back in the day, in the 2000s, before the dot-com bubble burst. A lot of those companies are gone, but some of them are juggernauts to this day. And a lot of them started out as one thing and kind of moved into another. So if you see the crypto space following that, I wouldn't be surprised. I certainly wouldn't be surprised. All right, we're going to move on to the next article. But in the comments below, do me a favor. Tell me, what do you think? You think Ether is going to beat out Bitcoin as a store of value? So we'll just go ahead and move on to the next article. Coinbase says it's a media company. Really? Coinbase is building out a media arm and will start publishing fact checks. But readers know the difference between journalism and marketing. I'm not really sure there's a whole bunch of big difference between journalism and marketing, to be honest. Jeff John Roberts and Daniel Roberts, who wrote this article from decrypt.co. So if you want to read the article yourself, it will be posted down below. All right, here we go. Have you heard of the biggest name in crypto is also a media company now? Coinbase CEO Brian Armstrong said so himself. In a blog post this week, Armstrong declared that every tech company should go direct to their audience and become a media company. Coinbase, Armstrong says, will now start posting fact checks in this age of misinformation and aims to publish the truth. Okay. We're going to start early on this one. This is going to be a huge problem moving forward, especially in the U.S. I don't know about other places. I'm assuming it's probably going to be about the same in other places. I don't think journalism. I don't see any problem with him saying that every tech company should go direct to their audience and become a media company. Maybe this part of it. I think that these tech companies should speak directly to their audience. I don't know that they should become a media company. Coinbase Armstrong says we'll now start posting fact checks. This is kind of a catch-22. Fact checks, in journalism, journalism hasn't been journalism for a while now. Maybe it never was. You're almost always going to have a subjective part to it, right? Now, you as the reader can kind of read and see and feel that, right? A lot of times you'll read an article and you know exactly what the narrative is, where the narrative is coming from, who benefits from that, and why they might be saying that, or omitting certain things, or manipulating certain things. It is kind of an age of misinformation now, but the question is, when he says age of misinformation, is he talking about, like Facebook thinks that there's lots of things are misinformation and they close them down when they're not really misinformation. It's just inconvenient information to what it is that they want you to glean. So, it aims to publish the truth. Again, completely subjective in a lot of ways, right? We don't know. We'll have to hold their feet to the fire. You'll have to read and see, and if it seems like they're basically just slobbering all over their own knob, then it's just a bunch of BS and it's just all PR, but we'll see. Well then, guess it's time for us at Decrypt to close our laptops and find something else to do. Maybe we can open a coffee shop or try goat herding. That sounds fairly peaceful, goat herding. I don't know, too many or peddle, I can't say that word, or peddle S coins for a living. No need for the media if tech companies will kindly do our work for us, right? So are you admitting that you peddle S coins? I mean, is that, it kind of sounds like that's what you're sort of admitting to that. Perhaps you'll indulge us this one more column. What should we make of Armstrong's endeavor? The most common reaction has been bafflement. We spoke to several media professionals, and they mostly wondered how Coinbase's plan, blog posts to present this side of the news stories and controversies, is any different from what other companies do. It's called PR. Yes, it is. Coinbase is also building out a media arm, by the way, and as Axios reports, unlike a typical newsroom, the editor Coinbase is looking to hire would report into Coinbase's marketing team. It's a safe bet that the editor's content will be expected to jibe, with Coinbase's assessment of the truth. If it looks like marketing and sounds like marketing, it is marketing. I find it a little bit ironic that Axios reports this. It's kind of like the pot calling the kettle black in this particular situation. If you don't think a major news publication like this doesn't have to go past a whole bunch of people that would be just like the marketing department, then you're dead wrong. Almost all of those major companies, they have their own narrative they like to push, and if you don't push it, then you're not going to be working there, as evidenced by plenty of people who have come out after they've been let go of by a company and basically said that they've, some of the stories that they have created were quashed because it doesn't fit with the narrative. Anyone who thinks that there's all kinds of integrity in journalism is fooling themselves. That doesn't mean there aren't good journalists out there. It doesn't mean that they're not objective ones. It's just 95% of the online and print and media and video, they all have their own axe to grind. It's not like Axios doesn't have to jibe with their people for their assessment of truth. This is just kind of ridiculous coming from these people here. They pretend that they don't do the same exact thing. Maybe it doesn't go directly to the marketing department, but they definitely have a political axe to grind most of the time. And if they think they're going to do something to harm something, some kind of company that advertises on their site, yeah, they're not going to do that either, 99% of the time. Maybe if it's super egregious, but I don't, this is kind of like them saying, oh, well, how dare he, we're above this, we are the judges, we are the arbiters, and they're not. So, kiss off. But maybe we shouldn't be so quick to snare. That's good advice. I am snaring, so. After all, the media ambitions of Coinbase, Andreessen Horowitz, and other Silicon Valley names is a shot across the bow at the already battered journalistic establishment, and already battered for good reason, really. Once upon a time, news outlets enjoyed a monopoly over information distribution that gave them enormous power, prestige, and money. Today, that monopoly is utterly gone thanks to internet platforms that let anyone tell their story without the media middlemen. Many once famous names in journalism are broke, irrelevant, or both. That is true. But I wouldn't say that it's utterly gone either. I wouldn't say that it's utterly gone. I guess you could make the argument that the monopoly is, but I mean, they control a lot of stuff. Facebook seems to side with a lot of these journalistic establishments, right? Facebook, Twitter, they side with that. If something goes against the official narrative of, highly ranked ideological papers such as the Times or the Washington Post, they side with them all the time, right? Even if it's not right, even if they're dead wrong, they'll still side with them. You've seen many examples of that over the last couple of years. We'll continue on before I get too high on my horse. Armstrong is not wrong that the traditional media often fails to tell a fair or fairly accurate version of a story. Usually he notes this is due to ignorance over malice. Maybe. But sometimes it's not. For instance, it's hard not to note that New York Times relentlessly negative coverage of Coinbase and wonder if the antagonism was exacerbated by Coinbase's decision to front-run the Times scoop about controversy over Coinbase's approach to Black Lives Matter. I did not know what Coinbase's controversy over Coinbase's approach to Black Lives Matter. I'll have to look into that. I'm not going to do that live in this video, but we'll get to it. I'll look into that and see if it's noteworthy. And it's no secret that the media outlets are political. True. Rupert Murdoch gladly loses millions every year in owning the New York Post because the tabloid gives him a megaphone to harass his liberal political enemies. Does he really lose millions every year on the New York Post? I mean, I'm not really sure how much that's different from the New York Times, although the Times probably is profitable, but I don't know that for sure. Be interesting to look into. But is that any different than the New York Times basically having its megaphone to harass its conservative political enemies? No, I don't think that there's that much of a difference. And the patriarchal clan that owns the Times ensures the paper presents their Manhattan liberal worldview as objective. Oh, kudos for him. He did point that out. Meanwhile, individual journalists might pull punches to preserve relationships with certain companies, true enough, or gin up exaggerated headlines to please readers or editors. That's true as well. In this context, Coinbase, the media company, is merely one partisan voice in a fractious news landscape, and Armstrong is at least aspiring to behave decently, pledging that Coinbase will acknowledge its mistakes, avoid needless antagonism, and so on. We can fact-check him on that over time. Yes, we can. That is an excellent point. The problem here is that Armstrong is making the same mistake as some of the traditional media, assuming that Coinbase alone possesses the truth and that those who disagree must be wrong and in need of correcting. This mentality is a recipe for tribalism and groupthink. Yes, it is. Surprise, Coinbase's truth is likely to reflect the interests of Coinbase and of Armstrong's clique of billionaire Silicon Valley libertarians. So there's a very real risk that Coinbase fact-checking will devolve into out-and-out propaganda sooner rather than later. And he's probably right about that. Even more troubling are the lessons Armstrong draws from other companies' approaches to media. He blames Facebook's unpopularity on negative media coverage of Facebook, without acknowledging the company's disgraceful behavior that gave rise to the coverage in the first place. He praises Peter Thiel, who spent tens of millions to destroy the website Gawker, and as a canonical example of fighting back against hostile media. Yeah, it's kind of unfair, say, oh, well, they're only unpopular because of the negative media coverage. No, that's not the case. Not in many people's minds anyway. Basically, because they censor people, they probably would have never got any flack from a lot of people if they just didn't censor stories and basically decide truth on their own. When you censor a bunch of people because of their political or societal beliefs, and then cut off, any process of them making money off of it, a lot of people, that was their career, and not that they were wrong, they were giving their opinion, right? And Facebook just kind of unilaterally made the decision, well, we'll just decide what's true and what's not. And you can tell by what stories they cut and what stories they don't, what they think not is really the truth, but what they want you to think is the truth. And it's good for him to point out that that does happen on both sides. Peter Thiel, okay, well, whatever. I'm not going to get into that right now. That'll make the video too long. Okay. All right, I don't think I've read this yet. But the worst part of Armstrong's declaration is his implied rejection of the role of free press in American democracy. Since the founding of the Republic, independent news outlets have provided a critical role in surfacing information that powerful people prefer to keep buried. Now they seem to help it, by the way. But I digress. This includes political scandals, Watergate, Lewinsky, and so on, but also business scandals. Reporters in Wall Street Journal and Fortune exposed the fraud at Theranos and Enron. It is inconceivable that those companies' own media or fact-checking divisions would have published what those traditional media outlets did. That is a good point. The bottom line is that Armstrong's expanded foray into media might provide useful information about crypto and his company, but let's not pretend Coinbase is going to produce journalism. That's the job of Decrypt and other news media outlets, and we're not going anywhere. Well, look, I don't know these fellows. You're not the arbiter of truth either, and you're certainly not beyond, just in this very statement. That's the job of Decrypt and other news media outlets. If something happened at Decrypt, would the journalists at Decrypt report on it? If it would negatively impact Decrypt? Probably not. Or if they had a sister site or a company or advertiser that they worked with, are they going to publish stories that negatively affect that advertiser? Probably not. So let's not pretend that he's going to be that much different than you. Maybe a little bit different because he's not a journalist, but at the same time, there's no real difference, right? But I do think it is important that you hear journalists. I just wish more journalists would speak the truth. I do think this is a well put together article. I do think that you have some very valid points. How this affects your view on Coinbase, that's up to you. Let me know in the sections. Does this bother you? Are you really gonna get all your news from Coinbase about the products on Coinbase? Probably not. So it doesn't matter if he wants a media arm, unless people are going to read that media arm and believe everything that media arm says and not go out and look and see for themselves. It's just like with anything else. People that are, people who've been taught critical thinking skills, they're not going to rely on Coinbase's information. They're going to read it. They might read it from Coinbase, and they might read it from you, and they might read it from the Times, and they might read it from, but that's their opinion. Basically, you're going to put out the news, people are going to read it, and they're going to make their own decision. And then that's really the way it should be in a society. As long as nobody is outright lying, then I don't really see a problem with it. And it is good for a company to speak directly to its audience. That doesn't mean that the audience isn't going to get news from other places. So, it is what it is. We'll move on to the next article. Now, there's a little bit of a connection with the first article and the last article, and I'll explain when I'm done reading it here. So, China's online marketplace records surge in mining machines listing following ban. Okay, I have no idea how to pronounce that. I'm not even going to try. Ibram. I got that part. This one I'm not even going to attempt to do because I'll just make myself sound silly. So I'll leave that up to you. You can see it. Here, I'll even put it up there again. You can see that. You can pronounce that any way you want. Okay, so Chinese online secondhand market sees surge in secondhand mining machines from Inner Mongolia and Xi'an? I don't know how to pronounce that either. Marketplace sees surge in Bitcoin mining machines. China's largest online secondhand marketplace has registered a surge in Bitcoin mining machines listing over the past few days, especially from Inner Mongolia and Xinjiang regions. The two most prolific Bitcoin mining hubs. The significant increase in the sale of secondhand Bitcoin mining machines comes amid growing crackdowns on mining operations in China. Ruh-roh. Okay. Wu blockchain, huh? On China's largest online second-hand commodity trading platform, the number of mining machines has increased significantly, mostly from Inner Mongolia and Xi'an. And other places, and prices are also continuing to decline. I apologize. I'm going to leave the laughter and my mistakes in on that one because hopefully it'll pick up your day a little bit. You could go, oh my, the guy doesn't even know how to pronounce that. Okay, so Inner Mongolia has enacted a new legislation that will restrict any type of crypto mining businesses in the territory to fulfill the carbon emissions goals. Wow, I'm shocked. The new regulations prohibit all types of mining operations, large or small. Okay. After failing to achieve Beijing's quarterly carbon emission goals, I didn't even know they had those, the Inner Mongolian area launched strong anti-crypto mining measures in April of this year. Inner Mongolia, along with Shan, is one of the country's most renowned Bitcoin mining centers, with multiple Bitcoin mining farms, owing to the cheap energy sources used to power these operations. Okay, so it's centralized there because power's cheap. All right, well, that makes sense. China is presently regarded as the world's crypto mining capital, according for almost 60% of the total hash power fed into the Bitcoin network. Really, is that much? The availability of cheap, clean energy sources. What? The availability of cheap, clean energy sources is the key cause for the country's large concentration of miners. Okay, so if it's cheap, clean energy, then why are they banning it? So it's already clean, but the carbon emission goals are set to such a way. Okay, that doesn't make a lot of sense to me, but okay. I could maybe see cheap. I don't know about this. This word gives me pause. All right, but I'll continue on here. Many people were concerned, however, that such a significant concentration of mining input was coming from a country with an autocratic governance, such as China. As a result, many regard the recent crackdowns as a strategy to diversify mining concentration and decentralize mining power input. Okay. When there were similar reports of probable mining ban in the country a few years ago, miners went on a similar selling spree. I actually remember that. Miners have been forced to sell coins to fund a possible migration to other, more favorable countries, or to completely restructure their business as a result of circumstance. Selling and uncertainty may persist for some time, but according to Bixen Mustafa Yilham, I don't know, VP of Global Business Development, it should not dissuade Bitcoin. Instead, he says that this is a huge opportunity to further decentralize Bitcoin mining and that nothing essential about cryptocurrency has changed. The fact that so much of the world's mining operations were consolidated in a communist country was regarded one of the most powerful arguments against Bitcoin and a potential threat to the network. He brings up an excellent point. Bitcoin mining becoming more decentralized benefits all players and, if anything, increases the cryptocurrency's underlying strength. It might go through a few more stages of development before fresh growth is ready. All right, so that's the end of that one here. Now, do I see, where is it here? Okay, well, I have no idea who actually wrote this article. There doesn't appear to be a name associated with it, so I don't know who this is. I guess maybe just the site itself. They don't actually have. Maybe it's the site owner. Does it have it somewhere in here? Oh, I'm sorry. It was this one, the one I couldn't pronounce. Boy, this one was awful. This one was a hard one to read through, but I got through it, and hopefully you got a little bit of joy out of the giggles. I would assume that this probably is for smaller miners, not bigger ones. First of all, you're seeing this. Now, maybe they just pulled them off the shelf and hooked them up so they could show them. But my guess is this is really going to affect small mining operations and not the larger ones. Now, I could be wrong. Even if the larger mining operations had to move, they could move. But your normal everyday miner, somebody who's mining in their home, or somebody who's got a small space and mining, that's going to affect them because they're probably not going to want to move to another, I don't know, region. I guess I'm not sure that. I don't think they have states in China. I'm not sure how that works. But if they, they probably have the money and the resources to move, whereas the smaller people are going to be selling off their miners because they can no longer mine, right? It also occurred to me when I read this story and the other one. I'll go back over here so we can kind of refresh our memory. Privacy coins surged more than 20% after Australia cautions crypto trader against tax evasion. Okay. Well, I would certainly say that if I were in China and there was a crackdown on Bitcoin mining in my region, and with the past history of the CCP and their views on a lot of this cryptocurrency stuff, and the fact that they are actually issuing their own, like I think the government itself, the digital yuan is, if it's not already out, it's coming out soon. I would imagine that a lot of the people who own Bitcoin in China, like these miners, might consider putting a lot of money into, may have even been mining this stuff here, putting a lot of money into the cryptos that aren't as trackable, right? The privacy type coins like Monero, Zcash, Horizon, and Dash. I'm not sure that China has I'm sure China or Chinese companies are, I'm sure there's Chinese people in the technology space that work for these companies here. I would also imagine Chinese people are notorious for trying to spread the money from the printed money that they get from the actual government into things like real estate, even crumbling infrastructure real estate in their own country, but more so in outside countries. So I could see where they could use this. They'd want to put their money or to mine these particular things, right? So I could see where this story about China's marketplace resources, selling all of these miners, getting rid of this stuff, they're probably bracing for impact right here. Whether it be true or not, I would imagine that some of the citizens of China probably are either trying to hide their money or want to put it in places where it's not as easy or trackable, maybe to get it out of the country, right? But who knows? Also, a country that's rampant in stealing intellectual property, I imagine they're pretty sold on the idea of something that's not easily copyable. So I could see where this story probably is part of what's going on here with the 20% surge in privacy coins. The more China does things like this, the more I imagine you'll start to see things like this. And I think China will do this here. First of all, they're not going to want limited cryptocurrency, right? They don't like a Bitcoin, right? They want to be able to print as much. Same with the U.S. and a lot of other countries. They want to be able to print unlimited amounts of money, especially now because everybody's printing it. I almost said a naughty word. Let's not do that. But I don't know. You tell me. What do you think? Do you think that this story affects these privacy coins in any way? Let me know in the comments below. I'm super interested in what you guys have to say about this stuff. I like to hear from you. I probably won't spend a lot of time. I will read the comments, but I probably won't spend a lot of time actually making comments because, as most people know who watch any crypto channel, you get a lot of scammers who try and pretend to be. So I'm not going to go down there and start talking with everybody because I'm afraid that that's going to lead to somebody pretending to be me in the comment section. I'll never ask for your phone number. I'm not going to do any of that stuff. I'm here to read the news, get your thoughts, and to share mine with you. And hopefully together we can come up with a consensus that helps us in our trading endeavors day to day. So anyway, that's going to do it for this one. These are the important news stories that I picked out for today. Hopefully they help you out there. Good luck, traders. My name is Jay. I'm with Bite Size Coin, and I will see you soon.